Hello, everyone. Welcome back to an episode of It's Time. And Dr. Jen and I are so excited because we have the fabulous Kerry Rupp with us on our episode here. And one of the things that we think about a lot when we think about trying to rock your high half, whatever number you want to start with, 40, 50, 60, and beyond, is these are decades where you'll have expertise and potentially time and hopefully resources to deploy. And Carrie and her partner, Sarah, work a lot in the space of how to deploy those resources and to a cause that's near and dear to our hearts because it's women led companies in the health sector. But more importantly, what she thinks a lot about is how to get women at the table and in the game of investing. And whether that's really early in angel rounds or later on in different series of investments, Carrie is a thought leader in how to participate and how to get yourself comfortable participating without doing 5 months of research whenever you're thinking about an investment decision and how to get in that deal flow. So we're so excited you're here, Carrie. Thank you for being with us.
Thanks for having me.
Absolutely. And then we have to also secretly share that Carrie is another person who comes to Park City a lot. So we get to see her. She's in Austin right now more than full time, but we love that we get to see you here too.
Me too. Absolutely.
So give us a little bit, if you don't mind, just kind of the 5 minute overview to let people know about how you got to where you are now and what you're thinking about.
Yep. So where I am now is Sarah and I have a venture capital fund called True Wealth Ventures, which, as Lindsay alluded to, invests in women-led companies that are improving either and both human or environmental health. And so I got here from being first in the startup space for most of my career, although admittedly that was mostly in tech. And while we do some tech, we also do some better for you, foods and skin products and med devices and things like that. So we don't just do tech today, but my career was mostly in the startup space in tech. And then I moved over to the investing side because it's, the other side of startups often need external funding, and ran an accelerator called Dream It Ventures in Philly for 5 years, where we not only helped launch early stage tech companies, but we actually launched a program focused on women-led companies, on minority-led companies, and on health-focused companies, and then raised a venture fund to follow on investing in the companies. So when I got connected to Sarah, who was thinking about starting a fund focused specifically on women and health and the environment, there were just too many parallels for us to not join forces. Funny side note there is the reason we got connected is that Sarah started telling people in Austin that she was going to raise this fund focused on women and realized she'd never met a woman in venture capital before, even though she worked in venture capital in San Francisco back in the day. And so multiple people in Austin were like, oh, no, you've got to meet Kerry. There's one. And so for better or for worse, we were the only two women GPs in the state of Texas for several years. So we kind of felt like we had to like each other and work together. Fortunately, we actually do.
It's fantastic. And so y'all have been doing this now how many years, Carrie?
10 years. Yeah, I just actually hit the 10-year anniversary of when we started fundraising for Fund One, which was mid or early September of 2019, I guess. I'm trying to remember when we started. Oh, sorry, 2015 is when we started. And then we did the first close on the first fund in 2016, really started investing at scale at 2018. And then so we've raised two funds at this point.
Awesome.
Awesome.
So I would love, it's interesting. And Lindsay's kind of been my coach in this space, like coming up through medicine. And I'm not making an excuse. Like I didn't even know that this was an option that you could participate in these activities. Like it was very unknown. I'm grateful for the people that surround me in my life in many aspects. But one of those was like, oh, just use this person. We've used them for years. They'll invest your money. And so I actually didn't even know there was another way to do this. I didn't know there was another way.
Totally normal. So
Right?
it's not shared like broadly. And some of that is partly literally because of government restrictions on the kinds of things you can do with your money, depending on your actual net worth. So it's like normal to not know all this stuff, yet people put shame on themselves or feel like they've been missing something that honestly, it just hasn't been shared. So that's one of the things that Sarah and I are trying to do is just help educate people because it isn't shared broadly.
Well, and I think I was fortunate enough to attend one of your events and learn. And I walked away thinking, I actually came home and I told my husband, and I was like, that was the most amazing evening of my life because I was like, there is this capacity that we can invest our money and make returns and yet be really proud of what we're investing in. And it can be very purposeful and aligned. And being a female entrepreneur and being a female in healthcare, like what you're doing just blows my mind. And I'm like, why didn't I know to put money there sooner or to like be aware of what's going on in this space? And so I just want to say for my own personal education and development, how inspirational and eye-opening this has been for me. And, while you're sharing your journey, I think the more we can educate women on how they can get involved in these processes and how they benefit from these processes is amazing.
Yeah. And so I think there's a number of different resources now that are starting to become available to women to just get up to speed on this. So my like day job, what Sarah and I do is just one particular investment opportunity, right? So we have a venture capital fund, with just two of us investing money out of that fund. It's one thing you can choose to do, but you ought to know the broader range of things you can do, not just in venture capital, but in private credit and real estate and, the stock market, which you may already be doing, whether you're doing that with an advisor or not. And so, our core area of expertise is in venture capital because that's what we do day to day. But I think there are some other groups, some of which I think you guys have been connected to at various points. But there's a group, for example, that's operating in LA and in Austin that might come to other cities called Women Abundance Collective. And they're literally teaching women about, hey, what is the stock market? What are private equities? What within there is venture capital versus private equity? What are bonds? That kind of thing, to just give that context. There's another group called Invest for Better that does a similar kind of thing, but they're very focused specifically around aligning your investments with impact and your values, right? So you think about the things you want to see in the world, and instead of just investing in a broad range of stocks, you actually pick the stocks that are companies that are actually advancing the things you care about. For example, if all you're just doing, you can even do it as a consumer, is just start shopping actually at places that align to your values, right? You don't have to be an investor in a sort of more formal way. You can invest in companies by buying the things that they sell. So I just give that context that I think the starting point is making sure you understand sort of the range of options, and then you might work with your wealth manager or otherwise to figure out like what your risk profile is, because some of these investments can be higher return potential, but that also usually comes with higher risk, i.e. you could lose more money. It's like more binary, and some of them are more steady. And so at different phases in your life, or just given your personality profile or other things that are happening that you want to balance off, so you've got some risk over here and some more security over here, you need to know how to do that right. And there are experts who can do that. I'm not one of those people. I know the concepts, but it's not my job to do that. I am offering an investment opportunity in one of those buckets. But Sarah and I care a lot about getting women access to this, because I will stop talking in a second. There's a study that was done globally around women's confidence in their ability to make investments. And the US ranked lowest for women's confidence around their savviness to make investments. And yet, when measured what their actual financial literacy was, they actually tied for first as the most financially literate. So there's just this confidence gap that we think we need to know so much about it. We need to get so educated. And it's actually not true. Most of us actually already know enough. We just don't know it or don't feel confident that we know it. And I think
Yeah.
overcoming that confidence gap is a big part of it. Not that there's some huge deep, I need to go get a, PhD in finance to make these decisions. No, you just need to know the lingo. You need to know where to find the things. You need to, have some people to talk about it with if you have questions. But the average woman isn't incapable of doing this. They've just been, their confidence has been undermined for, whatever reason.
Yeah. Yeah. Well, I think that's a great point to raise, because I think, many women, you raise a point like you need to be a qualified investor. So there's probably a little bit of that reference point to share with our audiences. Like, what does it mean to be a qualified investor? But many women are qualified investors, and they actually have made incredibly complicated investment decisions on behalf of an entity, whether it was a company or whether they worked in, the financial sector. But when it comes to their own investments, two friction points I hear again and again, and I've lived them. One is, I don't really know how to efficiently evaluate an investment. And I don't know that I want to spend the amount of time to evaluate a personal investment that I had to do when I did it in another context. And then secondly, I worked really hard to have this money. I don't I don't want to flush it away. And so there's some kind of thought process around carving out the right amount to play with and then carving out a framework for how to make those investment decisions that doesn't feel overwhelming.
Totally. It's funny because there's an interesting parallel to what you were saying around women and our negotiating power too. I don't know if you guys have read this, but that women are really great negotiators on other people's behalf, but they're so sort of do their worst job of negotiating when they're negotiating on their own behalf, and sort of sounded like the same thing around financials. I mean, I would say there are definitely are experts that are great at this. And so if you don't have like a wealth advisor, you might want to think about whether this is a good time to have them. So you have like a sounding board and a benchmark, but there also is just talking to your peers because the guys do this. Okay. And that's one of the things that's still culturally very strange, but you may find in your own life that your partner or your brother or whoever is going out to play golf or going to like watch a game, and their buddies inviting them to like invest in a bunch of storage units that they're invested in. And
Yeah,
we're not at book club telling each other that we've got a bunch of, storage units to invest in, but we
right.
might want to think about doing that because that's how deals are getting socialized a lot of the time. And it's just become, sort of normal in the male convening to do that. And we, for whatever reason, women have not been doing that because you just need to start getting, and to your point about the time that it takes, a lot of the early investments that people tend to make in these kinds of things are in group settings where you share the load, right? So there's things like angel groups where instead of me trying to find enough deal flow to know that I've seen enough to know what good looks like, and then do the work to dig in and do the due diligence and then figure out whether the price is good, doing that all on your own is pretty overwhelming. But if you join an angel group, those people have been there and done it before, at least some sector of the group has, and you can share that work. You split it up, or you can even just convene and collaborate and bounce ideas and questions off each other. It's more effective than doing it on your own. So I think sitting at home alone and beating yourself for, I should be doing this, is probably, you're not thinking about it right. Like, how do I join the right groups or talk to the right people so that we're sharing deals, we're sharing what we're doing, how we're thinking about it, and sharing the work.
Yeah.
And one thing I hear a lot is I don't have enough capital to make an investment. And so, and I think I've heard that from a lot of different people. I've heard that as a question to some of my other female friend VCs who are like, people think you need millions and millions of dollars to play in this space. And so, can you talk a little bit about that? Like,
I
how you
can, but I
start?
also want to be careful about the fact that like I'm not a, investment advisor, and everyone really does need to come to terms with their own comfort around what enough is. So you need to have done the math to say, how much do I need to be secure? How much do I need to be in? Everyone kind of knows the risk profile of the public. I mean, obviously there's been, aberrations like the Great Depression, but you sort of know, okay, I'm going to put this money away. It might gain some, it might lose some, but over time it is shown to have, gains. Whereas the other kinds of investments we're talking about, whether it's, private equity or private credit or real estate, those are going to be much more volatile. The reason people choose to invest in those is that they also have the upside potential, right? If you invested in Google before it became anything and then it was, sold for billions of dollars, like you're gonna make a lot more money. Now you might have invested in startup, pets.com, and it went completely bust and you lost your money, right? So you need to have that flexibility. So I do think for some people that risk volatility is too much and they might not have enough to invest because they just literally aren't willing to take that loss, right? So and that's like, okay, it's just a different risk sensitivity. But then you need to think about what are the levels that I'm willing to actually take a risk with. Like if I've got these things secure, I feel like I know how my retirement's going to get paid, but this is the money that I feel like I could take a risk with for upside and or know that I'm investing in the impact of things that I care about, then you can decide what to do with it. Now, the challenge is that not every investment lets you just dip your toe in the water, right? So a venture capital fund like ours might literally have a minimum investment of 250K. And so that's a lot of money to put into one basket if you only have, a 250K to play with. I wouldn't suggest you put all of that into one bucket, right? The diversification of a portfolio is important. So when someone's starting to angel invest, a normal rule of thumb is, hey, put 250K aside that you're going to put into angel investing, but do 10 to 25 investments and don't do them all in year zero or to year one. You want to actually plan to allocate that over X number of years into different types of deals, some of them early when you're getting started, maybe more later when you have a better sense of like what you made in the early ones, that kind of thing. And so different kinds of investments will have different minimums. And so an angel investment, depending on whether you're getting in directly or going through a group, might allow you to come in at 5K or 10K. And then there are things online where you might be able to join a group of women together to work on, something together, where maybe you can put 10K into a fund that's a small fund that's just doing small checks at the beginning, and they let you have a role in looking at the investments. And it's just a way to start getting comfortable with the concept. So there are rules and levels and restrictions and things like that you start to, you just need to know to ask the questions. And so sometimes, like, is there a minimum investment? What's the, what is that level? Okay, I can't go there yet. I'm going to go over here to this group who maybe can take my, smaller check to get started.
Yeah.
I think
And
that's awesome.
I think, Kerry, one of the things that you do a great job explaining is like, so it's 250,000 and realistically, whatever the number is, you have to have the psychology that that might not ever come back, right? So once you get into that investment world, it's like, this is money that I'm going to invest, but I'm not dependent upon. And then there's a little bit to educate people about the time horizons, so
Hmm.
this is something like the stock market you can check in on every quarter or every 2 or 3 years. But in the non, public markets, you're talking about a time frame that's much different. Can you
Yeah.
kind of
And
give
I
us a
think that's
bandwidth around
another,
that?
yeah, there's another question you want to ask of every opportunity. In a fund like ours, it's called like a closed pool fund. It's going to be at least 10 to 12 years before you get all your money back out. Because the way it works is we're going to invest in, let's say, 15 companies over time. And then those companies have to go through their process of getting bigger or getting smaller and raising more money. And eventually, it's not until that company either IPOs on the public market or gets sold to another, strategic acquirer or PE firm, generally, that you get any money back. And
Yeah.
that takes 7 to 10 to 15 years. And so if we've got 15 companies in there and they're all playing out that process, and by the way, some of them, unfortunately, are going to not make it. They're going to go to zero. Until all those companies have gone through that process, you're not getting your proceeds out. And I say 10 to 12 plus because sometimes it takes longer. And even though the legal term said, hey, we're supposed to be done by 12 years, we still got a good one. It's not ready yet. Probably going to extend the term to let it happen. Whereas an
Yeah.
individual startup, you're just riding that one startup and what it's going to do and whether it IPOs or gets acquired. And then in real estate, it's a different set of criteria. There are some types of investments that you can come in and out of quarter by quarter, depending on like what their structure is. They're a little more liquid than what I'm talking about, but they also probably have a different risk profile, right? So the high returns are the long-term bets, whereas maybe the more modest returns are you've got more, ability to get your money in and out. So there's always like these trade-offs, right? They're just levers that let you kind of find the balance that you're comfortable with.
Yeah. Well, but I think this used to be a question that some of us might have thought was, hey, that's a luxury question. Like, I'm just got my head to the, nose down, head to the grind, or whatever the expression is, and I'm just trying to make money and take care of my family. But the data we see now is like something incredible. Like 70% of the wealth is going to shift to women by 2030. So the combination of aging and changing inheritance dynamics, et cetera. It's like it becomes more of a responsibility question than a luxury question around, getting educated and feeling comfortable in this arena is like Dr. Jen and I will talk about it like, hey, you might live to be 100 whether you want to or not. So you might as well intend to get healthy on that journey. And it's sort of a similar thought process, which is like you might not want to learn how to manage this money, but you might have to. So, how do you start to get in the game?
Yeah. And one thing to think about, I mentioned that there are wealth managers that can help you navigate that. In some cases, you have to also understand how the wealth manager gets paid and what their incentives are. In some cases, for them, the more money that you have in their vehicles and on their platform, the more they get paid. And they may actually, certain kinds of wealth managers are restricted from actually telling you about things that are off their platform because they've done all this work to due diligence the things on their platform. So if you want to invest in your friend's brewery, they might encourage you not to do that, either both because they just don't have anything to do with it or because they have the wrong incentives to do that, right? So you also have to make sure you're not only getting your information. And then that's not to disparage the industry or anything. Other kinds of wealth managers, it's part of their deal to just make you happy and successful overall. And they can pull in different tools and different things that you can invest in. They can help you evaluate something from the outside. But you need to know the kind of person you have and what their expertise and what their motivations are. And that's why talking to your peers and other groups and understanding the broad range of things that are out there are helpful because everyone's got a different incentive and a different set of education and a different access to different information.
Yeah.
A little bit different question. So after you've raised your fund, like how do you pick the companies that you're going to go invest in? Like what are what's attractive, what's exciting. I think raising daughters who have entrepreneurial spirits or want to do things like that, like how do we guide them into making an attractive company that someone like yourself would look at and be like,
Yep.
wow, that looks really cool.
So one of the things to think about again is just remembering that like we are one specific type of finance. So venture capital is looking very specifically for startups versus small businesses, meaning startups are high growth, fast growth, big potential. I mean, frankly, the person who's running a startup is not going to run that for the rest of their life and give it to their children. Like the investors in it want to see a return, which means it needs to get flipped over in terms of ownership. So it tends to be a particular type of business. That doesn't mean that there aren't other really compelling businesses that don't need my kind of money, that need like an SBA loan or, a long-term investor who's going to get dividends over time. But I'm specifically looking for fast growth and like high upside potential, but also a turnaround in a relatively short period of time. When I say short, like, 5 to 7 years, even though it often takes longer, but like you're looking at that window. So we're looking at things where there's a really big market, right? So small niche, like sometimes there are, markets that just don't have enough potential, like pediatric medical devices. There are real good reasons why a medical device has to be built smaller for a baby to be effective. And as a human with a child with a particular condition, you want that startup to exist to build that thing. But as a venture capitalist, that's not going to be a $1 billion market because there just aren't enough babies with that condition to need a small device. And so that kind of funding, and there's actually government grants specifically to do that kind of thing because the sort of the private market dynamics don't make sense there. So I'm looking for a huge, big market potential, really big pain, i.e., there isn't some workaround or competition that means that, like, okay, it'd be nicer if this product existed, but I can get through my day using this product that already does exist, kind of thing. And then you got to have the team that knows how to execute on it, right? So it's not just the idea, but it's the team of entrepreneurs that have the mix of skill sets and the tenacity to go through the ups and downs of having to find funding and hitting glitches and having the big customer say no and all those things, but also the listening skills to hear what the market is telling them. And so you need this like balance of like tenacity and persistence and like vision, but also, oh, I'm hearing that the market, even though what I wanted to build was this, the market wants this instead, and I need to shift, but also not being too fickle and just listening to everything and, getting switched around. So there's like this balance of like personality skills that at the stage at which I invest, it is not what does the spreadsheet predict as the revenue. It's like, is this the team that's going to take this problem and the proposed solution and actually like see it through because they've got the right skill sets and personality to do it. And then there is a bunch around the math of, how much is it going to take to build the thing? Is it cost effective to actually market and reach the customer and actually to make money off of each one? There are some things about the financials, but at the beginning, it's mostly theory and assumptions about the financials as opposed to reality. And then over time, you test and refine those elements. You have to look at how competitive is that market and do they have some sort of edge? In some cases, that's a patent or some other kind of, defensible intellectual property. In other cases, it's first to market. And so you've got to really, pour on the steam in the beginning to like get enough. First to market is usually not enough unless you also have like effects that keep people stuck in that network, that they're, either referring other people in and it's more valuable with more of them. So they're switching costs. Just being first to market can, you can get outrun by someone with more money to like compete against you, right? So there's different elements of like, what's a defensible barrier to entry? And those are the kinds of things you're looking at the stage we invest. It's not, I already know exactly how much it costs to acquire my customer and how long they're going to stay with me and how much money I'm going to make off of them. And, it's like a really fully functioning machine. It's a bunch of assumptions and tests and theories that we're, kind of putting a little bit of money in to go test and see if it's going to work. But we see this big market, a big pain where, there's something unique and with a barrier to entry that this particular team is going to be good at going to solve.
I love the way you described that, Kerry. And you talked about a couple of different types of funding. So if you were to kind of put yourself in the shoes of, hey, you know what, I'm a midlife woman, I have some resources and I have some time. What I've heard you talk through are different phases of investment. And so if you wouldn't mind just sort of pulling back and be like, okay, if you're thinking about this as a first time investor and you can go get smart about all of these different tranches, here's how the funding tranches work. Like you talked about debt with an SBA loan or potentially a SAFE, or like what are the tranches of funding where an individual can participate?
Yeah. Well, so if I'm thinking specifically about the startup space, There's friends and family investment, which comes in when the entrepreneur's just got an idea and you are literally just backing, you know what? Lindsley's smart. I went to college with her. I saw her be really successful. I bet she's going to figure this thing out. And, you write a check based, frankly, basically on relationship and faith in the person and their potential. You might know the idea and think it's cool, but it's because Lindsay sold you on the idea that it was cool. And then the next level from that is usually angel funding. That's a more substantial check. Usually they're bringing some expertise from their own career, and or the industry that they're in, or they're in an angel group where there's a bunch of that together. And then usually venture capitalists will come in at seed. And in order to participate at that round, you're usually an investor in the venture capital fund, and you're in most cases not making the decision about each individual investment that the fund makes. You backed a firm like mine because you like the thesis of what we're doing, and again that you think we have a credible approach. You will probably get updates on the companies that are in that fund, and you might actually sometimes have opportunities to help them out because they'll say, hey, our company number 2 is looking for people who know about this market. Can anyone help out? But you aren't making those investment decisions. You're making the decision to invest in the fund that's going to make the decisions.
Mhm.
And then as companies get bigger, they get private equity funding, which is a sort of a later stage version of what we do. Generally, the investors in the private equity funds and in a lot of venture capital are institutional investors. So it's like endowments and pension funds and parties like that. So you may have an opportunity to invest in a private equity fund, but they're raising billions and billions of dollars. So your cute little check is sort of less relevant to them. So that's the private equity side of things. There are other kinds of funds that are hedge funds and private credit funds and all kinds of vehicles like that. That is like less my area of expertise, but those are all different, risk return profiles and different places you can invest. I would say it's less about where you are in your investment journey, which one you're going to invest in. It's more sort of like the risk return profile and the types of things they're invested in, because we focus on impact investments. We want to not only put our money to work, but we also want to invest in things we want to see in the world. So we're funding women who are making healthy products, or they're making environmentally healthy products. And so for us, there's a blended, I want a financial return and I want to invest in the things I want to see in the world. So there's a mix that we're having people look at. And you want to look across that spectrum to say, which are the ones that are going to give me my financial return, but are also going to do what I care about.
Awesome.
Yeah.
Super cool.
I think that's a
Uh,
great overview. Yeah.
how so I guess I'm trying to phrase this question in an intelligent way. How do people find angel groups? How do they find like where to start? I think we have so there's lots of different doors that you can go into depending on all the things that we've talked about. But how do you find those doors?
Yeah.
How do you find these people?
And it's a fair question, just like when you started saying, hey, this isn't something I was aware of. A lot of these groups can't advertise, again, because of government restrictions around it. They don't want us to go out to people who don't have the capacity to lose money and sell you on investing in something that's risky if you don't have the wherewithal to do that. So a venture fund like mine can't advertise. We have to go through people who know people who know people. And so it is a word of mouth thing, which is one of the reasons why I said it was so important for women to start sharing these deals. Angel groups can be public because you're not investing in anything in particular by joining the angel group. You're just part of a membership group, and then you will make choices about whether you want to invest in companies there. So you can actually literally Google, you know, if you're, because I focus on women led companies, you could, Google angel groups focused on women, and there may be one locally, or there are a lot of times now these groups are, nationwide, and people are joining via Zoom and learning about the opportunities there. You could look in your local city for some of these. Just, is there education for different asset classes, et cetera. I could come up with a list of resources for you guys to like share with your group on the things that I know about. But it is about getting into the networks. And once you start meeting other people who have gone to this angel network, or if they've learned about this fund, you start realizing, oh, okay, let me see if there are other funds similar to this. It's, while I can't advertise if I'm fundraising, I can have a website, and then you can start to see, oh, are there other funds like this that also focus on women? You could start to get a sense of like what other funds are focused on women. So it is not there's nothing that can hand you those resources. I will mention there was a woman who was compiling A lot of the funds, again, focused on women led investments who unfortunately got a terminal illness. And so she bequeathed her entire kind of set of research, et cetera, to Wharton, the university. And they have an entire group there that actually keeps this database up to date, the name of which I'm not remembering, but I will get it get
Yeah.
it to you. But there are like a set of resources that would be a good starting point. And then once you're in that flow and you're talking to people about it, you'll start like, sort of getting connected to the other types of things.
What about resources, Carrie, for people who are like, I don't even know how to evaluate a good investment? I mean, there are obviously online courses and things that you would generate. Like, I'm going to go learn about this and audit this class or that class. But are there like either trade publications or you know really efficient ways for people to feel like they're getting smart on how to do evaluations of investments?
Yeah, I don't know about trade publications for investing in particular, just because it's sort of not the thing that I would go do. But those groups that I mentioned at the beginning, like Invest for Better or Women Abundance Collective or things like that, they're starting to teach you those things and starting to give you like the resources for it. So the Invest for Better group actually has a book that it uses. And I think they go chapter by chapter. You go with a cohort. And I don't have the name of that either, but I can get it for you. But, anyways, there are some of these things that, that have sort of a curriculum. In fact, Sarah and I teach a portion for both of those groups. We've taught the venture capital day, right? So we've done a whole hour just around, okay, what does it mean to invest in a venture capital fund? How does the venture capitalist get paid? What does that mean you're paying, in terms of fees? When do you have to put your money in? How much do you have to commit? When do you get your money out? All those, and why might you want to do this? Like, why is this particular venture class interesting to me? And when might it be a fit? We teach that class for those groups, and there's an equivalent kind of curriculum for each different kind of asset class in those groups. So I'm not trying to like specifically sell you on those two, but they're just ones we've been affiliated with. So I know them as good examples.
Yeah, I think those are great to start with. I'm just reminded of the research that shows like when you ask women if they're qualified for a job, if they're 80% qualified, they'll say no. But if you ask a guy and they're 10% qualified, they'll be like, yeah, I'm going to nail that job. And
Exactly.
so the mentality of like feeling comfortable with an investment it's a big behavior and mentality shift because it's not guaranteed. The risk is going to be there no matter what. And so somehow being able to teach people both the process for evaluation as well as the mindset for getting comfortable for risk it's a step change.
And Linz, I would even back up from that. I think opening the door to start the conversation. Like, how do we create the golf course environment? How do we create the casual watching a game, I'm going to share this with you environment? And I mean, I do think it is increasing our literacy across the board in this area and with all of these things. But I also think it's just the vulnerability of being able to ask a question. I mean, I know I learned so much at the event that you put on, but I was super intimidated to be there because I was like, this is
I
not
think a lot of people felt that way. And I think maybe if you knew that other people felt that way, it would make you feel less that way. Right. And so
but it did give me the confidence to now ask some of these questions or even like when I see a friend that's doing something cool and trying to grow, like asking like, hey, what's your strategy? Like, how are you raising money? Is there a way I can participate? And so I think it's just, how do we create, and it's one thing that like I'm working on in my profession is like, how can I create the environment where women want to come and have these conversations together? Like, how can I
Yeah.
foster that?
yeah, one of the things that we did differently, and I don't know if we did it this way because we're women and therefore we decided to do it differently. But when we started fundraising for Fund One, instead of, we did a lot of one on one coffees with people for sure. But we realized, hey, why don't we do a happy hour? We'll bring wine by women winemakers that was sustainably produced because that fits the theme of like, our fund. And we will do a session where we present what we're up to and kind of give some visions of like, so it wasn't like of the full class that we're giving in these other, but it was a little bit of like, hey, you might not know how we get paid, but this is the fee. And you might not know when you're going to have to pay in the money, but this is how it works. And we made it somewhat educational as well as at that time we were fundraising. So we are also pitching our particular investment. But because there was a group, women could listen to the questions that other people asked. And maybe the fact that someone else asked a question might give them the confidence to also ask a question, but they could also socialize with each other. Like, what'd you think? Are you going to do it? And it created a little bit more community. And as we got some investors, we would, when we could, bring someone who'd already invested to the table so they could explain and have the, social credibility of that. But we found that I think it helped people to feel like, oh, questions are okay. Not everybody knows all these answers. Or if the person who doesn't want to ask the questions, at least they could get the answers that the other people were willing to offer. But it's not normal how fundraising is done. So during Fund 2, we had to do a lot of that on Zoom as well. And so obviously that was like a different forum. Shouldn't have the same kind of like collaboration of being in a room with a drink with the person next to you, but at least you saw, hey, other people I know are here, or other people are here. And I remember that we had a guy that we know in town who's an active angel. So he's in this space, and his wife's in private equity. So he also knows, sort of the professionals. He couldn't believe that we would ever put more than one investor in the same call because he expected someone would ask some, terrifying question that we would be embarrassed to answer, or would like derail the group. And I just thought, oh, that's not a woman way to think about this. It was like a collaborative kind of
Right.
thing. We didn't have people derail. We had people like asking questions that might be supportive or helpful to somebody else. And so I just thought it was an interesting, it's not the way things are done in the male fundraising world. Has been very effective for us. And it's created such a community that now we have, like, we're having a happy hour coming up with our investors because we created community among our investors. And so we'll be the convener, and we're going to have some topics about different, like, do you want to sit on boards? Like, come to this table. Do you want to talk more about environmental sustainability and initiatives happening there? Come to this table. But we created community among our investors because it's been this kind of approach. So these conversations can kind of happen there too.
That's a great kind of, way to eliminate the difference of how people information exchange. So
Yeah.
it's good.
And I also think that's such a unique, I love the fact that you pointed out that it's just a different way of doing things. I see this in my space a lot. Like, I'll use the women's health and menopause. There are lots of people in this space all trying to make a living, but all willing to collaborate with each other to create this larger than what they could be alone vision, mission, and energy that then is really lifting up women across the country and across the world. Because if we were just competing against each other, we wouldn't make any progress, right? And so I think it's really interesting to apply that in different areas, especially an area of like finance that has been so male driven for so long. It wasn't that long ago that you were the only female in
Right.
Texas.
In
Right?
Texas.
Like, Texas is a big state,
Yeah.
black people.
I know.
Uh,
We were like, it'd be one thing if it were like Rhode Island or Delaware, but like we're the only two women in the state of Texas doing this
Texas,
specific job. Like that seems crazy.
I mean, crazy, right? And so I think talk about like an uphill battle, and yet, I mean, just kudos to you and Sarah for keeping this on your terms and doing it your way and not being afraid to do something that looks different than the norm in an industry. And the courage that that takes, I think, is incredible. And like, you should be, just so celebrated for your success in doing
Thank
that.
you.
And I think that that is a lesson that so many women need to hear and learn and recognize that just because an industry has been set in these ways and followed these practices doesn't mean that there's not a different way to do it or a better way to do it, or that you have to lose your own values and your own strategy to fit that mold. And so I just really want to celebrate that because it's a huge accomplishment. And we talk
Thank you.
to a lot of women on this podcast and in our careers who are really changing the way the game is played in their particular industry. And I think this is one that I can't even imagine the barriers of entry and the barriers to change in. And so I really just, again, applaud your work. How can we support you? How can we
Yes.
advance your mission, enhance your network? Where can people find you? All of those
Yeah. So,
things.
I mean, I guess, we're not fundraising. We're busy investing out of Fund 2. So we've invested in 9 of a planned 15 companies. So in the next year, we're planning to find those companies. So if anyone knows women-led companies at the seed stage, so you'd have to ask the company, that are explicitly improving human health outcomes or environmental health outcomes. We don't do certain things like life science or like heavily regulated medical device that's going to get like implanted during surgery. Really clinical solutions are sort of just outside of our area of expertise. And on the environment side, we don't do like massive, big clean tech installations that are going to get sold to like municipalities or industries. But anything else, that's really actively improving health or environmental outcomes. And it's pretty early. We write checks of about $1 million into the companies. So they're usually raising like 2 to 4, let's say, that's where we would love to see companies. If anyone wants to follow along in case they might be interested for a future fund or just want to, get connected to this course that I mentioned where it's just an hour long where we dig into venture. On our website, I think on our contact us page, you can sign up to be on, to let me know when Fund 3 happens or let me know about this, VC primer that we talked about, or just to join the newsletter to hear about our companies. So that's truewealthvc.com. So True Wealth, like venture capital, VC. And that's a great way just to stay connected to us.
Fantastic. Fantastic. Well, Kerry, thank you so much for spending the time to kind of just lay it out and say, here's what this horizon looks like. Here's how to jump in and participate. But more importantly, as Jen was raising, like, here's how to be an example of getting engaged and being in the game and pushing ahead. So thank you for that.
Yeah, absolutely. And I think, shaping a career in something that you're passionate about, but that is very grounded in success and, being a sustainable career for you as well. I think that, sometimes we feel like we have to sacrifice one for the other. Even like, my husband I have 2 teenage kids, tells them all the time, passion is not going to pay your bills. But like, so I love to look for examples of, for women's startups, environmental sustainability, health, like being able to combine all of those things into a very successful and being very true to that, I think is also just incredible and such a great
Yeah. It
example.
feels really good to feel like it's not that like in my spare time, in my little bit of spare time, I can volunteer in the thing that I care about. It's like
Yeah.
every day, all day, I can feel good about I'm literally trying to move the needle for women in business, for, improving health, improving the environment every day. I don't always make 4 strides every single day, but at least like the majority of my energy is going to that instead of just my
Baby
side
steps. Yeah.
like charitable endeavors,
Yeah.
and
Yeah.
that feels pretty good.
Yeah.
Well,
That's awesome.
thank you for your time.
Thank
I'm
you.
so excited I get to connect with you again next week and
Yeah,
looking
see you
forward to
Monday.
that. And thanks, everybody.
Thank you. Bye.
Thank you so much for spending your time with us here today. If you liked what you heard and you got some tips on how to live better right now and for the long haul, please help us reach more midlife women. Please share and rate and like this show. And we can't wait to continue the dialogue with you on our next episode. Until then, thank you. It's time.